And my biggest pet peeve, and people that have listened to me for a while, they know this. People will go out and spend tens of thousands of dollars on the next shiny object course, right? I want to be a wholesaler. I want to be a landlord. I want to be a flipper, whatever it is. And they will spend $0 and zero time learning how to talk to people and learning how to negotiate. And that should be the exact opposite. Once you have those skills and you keep honing them and you continuously recognize that you can always get better. I mean, this never stops, but it gets a lot easier. Welcome to the Generations of Wealth Show. I am your host, Derek Dombeck. And, I say this before every show, another amazing guest. But here's the difference with this one. His name is Derek, and it's spelled the right way. And yes, I make a big deal out of that. But the thing I learned in this show is how important it is just to keep on going, right? Don't quit. Perseverance is everything. And one of the ways that Derek has built his really, really immense mobile home park portfolio in a very short amount of time, it's going out there finding the off-market deals. And so I'm going to lay it out there for you. If there's something that I can help you with, don't hesitate. I'll help connect you with people that have been on this show in the past or other people in my network. But for me personally, I'm looking for RV parks around the country. I'm looking for resorts that have value add around the country. So if you're listening to the show when it first comes out, or you're listening to the show years in the future, reach out to us. Reach out to me. Go to thegenerationsofwealth.com, go to derekdombeck.com, shoot me an email, derek@globalgow.com, and connect with me, chat with me, and we'll see what we can do to help each other. So with that, let's bring on our guest. And here he is, the man, the myth, the legend, another Derek, spelled correctly. I don't know if the show is ready for two Dereks at one time, but Derek Vickers, thanks for joining us on the Generations of Wealth show.
Yeah, the world is not ready for it, Derek. It is not, and it's going to be a fun show. Hey, do you ever have people? You ever go into like you go into Starbucks or something, and you tell them your name, and they're like, "Oh, Darren or Gary," or you ever get that?
I get Eric, Daryl, Darren. Across over the last 49 years, I've heard a lot of them, and most people will spell it wrong. But I always tell them my mom gave me the short version because she maybe didn't know if I'd be smart enough to spell the long version. Who knows?
No, no, it's a possibility that mine did the same.
Yeah, but man, tell us a little bit about yourself. You've built up a really cool mobile home park portfolio that we're going to get into, but who are you? Where are you from? And how'd you get, started in what you do?
Yeah, so I grew up in a small town in Virginia, Grottoes, Virginia. It's like a couple thousand people. It's very rural in the mountains of Virginia, and I grew up around a blue collar family. My family had their definition of hard work was digging a ditch or doing it's like manual labor, and no one in my family really understood like creating wealth and generational wealth or anything like that. It was just kind of like, hey, let's work and we're happy. Like, look, we weren't like homeless or anything, but we were just totally blue collar, middle class. So I didn't really understand money or anything. Um, and I went to college, partied too much in college, ended up not finishing. Um, and then I moved back to Virginia. I went to college in South Carolina and went back to Virginia and was doing the same thing and hanging out with a bunch of idiots and losers. And um, so I decided to move to Florida in 2012. I had a buddy that I went to college with. He was like, "Hey man, you can move to Florida. You don't got to pay me rent until you find a job." So I moved down there and I was like, "Hey, I'm not doing the 9 to 5." So I was looking for jobs and I was like, "Hey, I got to do something." Found a job selling insurance door to door, business to B2B, business to business. I was cold calling business owners door to door, going to see them in person. And that was tough. It was tough. Like, I was struggling. I had I had problems. Like I like to party too much. And I was like, I had like cognitions where I was going to start getting out of that. And but it was tough, man. It was tough. I made 13 grand my first year. This is a business that probably has 95% turnover. Like most people quit even when they make 30 or 40 grand in their first year. Um, and I stuck with it. I think I made 25 or 30 grand my second year. Then the third year, I started to do better after I started to study sales and things like that. Um, and then in 2015, I was like, hey, I actually finally realized that, the people that are super wealthy actually don't make they don't make most of their money via like direct income, working income, W-2 income, right? Or even 1099 income, right? They have wealth because they have assets and they've invested and they've bought businesses and real estate. And so I was like, okay, so real estate like sounded very simple to me. People always need a place to live. And it just made sense. Like the rent comes in, you get a good property that people pay rent and it goes up in value over time. And I was like, man, this business makes a lot of sense. So I started learning how to underwrite, like back of the napkin, underwrite multifamily deals. And I did that for a few years. I mean, it was just, I couldn't even, at that point in time, my business was growing in the insurance business, but I couldn't even fathom asking somebody for 50 grand, like raising money. Like it just wasn't, I couldn't think with it. And these deals I was looking at were big deals. Like they were big multifamily deals. I didn't want to go like the single family route. I didn't want to do that. Like I wanted like multiple units. And so I just kind of put it on the back burner and was like, hey, I'm going to keep making money in the insurance business and just, stack my cash until I can invest. But I wasn't really stacking cash because I was making money and then putting it back in the business, making money and putting it back in the business. And I'd built up, it was 2020. I had a sales team of over 100 people at this point. So I
Mhm.
went from a loser salesperson to actually having a team. And I was training people, recruiting people, and that was going well. Like our team was crushing it. We were like top in the nation for this company in many, many categories. We did really well. And COVID happened, like our revenue dropped. No one wanted to freaking buy insurance. Like it was even in Florida, businesses were closed for like a week, 2 weeks. Um, but no one wanted to buy insurance. So I was like, okay, shit, I got to get this real estate thing going. And I found a list. Well, let me back up, Derek. I started looking for multifamily again. I'm like, man, this shit is like too expensive. And by the way, I didn't ask you about the cursing rule on here.
We have no rules, and
Okay,
we
good.
don't edit
Okay.
very
Okay,
much.
good. Um, yeah, so I started looking at multifamily and I'm like, man, dude, like this is the yields weren't that exciting to me. And plus the properties were like massively expensive in my mind at that time. So I learned about mobile home parks. I had a friend that was investing in mobile home parks in a different state. And I started researching the asset class and I loved it because there's a natural supply constraint. I can't here in Orlando, Florida. There's no chance in hell I'm going to be able to build a mobile home park. And if I do build it, it's going to be on the outskirts. It's going to be a lot of cost to build. It's not going to be affordable housing. So the zoning is so valuable, especially if you're buying in urban areas. So I love that because there's actually more mobile home parks, Derek, that are being destroyed on a yearly basis versus being built. So there's a natural supply constraint and an increasing demand for affordable housing. I'm like, man, I like this. And typically when we lease up, like after we do our value add, like these tenants, like they own the homes. Like we're not responsible for the day-to-day maintenance on the inside of the trailer. So I like that. And the I think the average time for a tenant to stay in a park is much longer than you have your renewing leases with multifamily and apartments. Like people don't move out of the mobile home park really. Like when they're there, they're there. So I love that. So I found a list in Florida of all the mobile home parks, and I did what I'm good at. I started cold calling the list between my insurance meetings, and I just started having conversations. Had no idea what the hell I was doing. Like I talked to people on the phone before, so I had at least I had built up some confidence and skills.
Hmm.
But it was still difficult in the beginning because I didn't really understand the business. I didn't know what I was talking about. But like this is where people screw up, and here's a lesson. Like people get stuck in the mechanics of it. I just took action, right? And kind of figured it out. There's always going to be an element of that. And I think because I did that and I was like, hey, I'm going to get into this business, I was like, I started to find deals, ended up falling into my first deal. I started looking for deals in like March, April of 2020 and stumbled into my first deal in September of 2020.
So you were, I mean, 5 months, you were just busting ass, cold calling, doing what you got to do. And you and I both know that two things. Most people are absolutely afraid to cold call or door knock because their fear is unfounded, but it's still a fear, right? It's the monster under the bed. When you're cold calling and or door knocking, you know, those people, a vast majority of them are very, very great people and they're willing to talk to you. No, you probably aren't going to get a deal the majority of the time, but that also leads to referrals and other opportunities in the future. And the other thing that I love about it is just your tenacity to keep going. Like
Yeah.
you didn't give up. And most people probably would have tried that for 2 weeks, maybe a month, and said, "This shit don't work. Go on to the next shiny object." Right?
Yeah. Yeah. And that's why, look, that's so the insurance business gave me that superpower. My superpower is my ability to keep going no matter what. Because when I commit to something, I just keep going. And like when I first started, my own podcast and doing social media, I committed for 10 years.
Mhm.
I'm not going to be the guy that I'm not going to do this for a month and be like, oh, this shit doesn't work. Right. I'm doing it. And that's just helped me tremendously over time and just persisting. I just think it's a huge thing. And it's kind of like, oh, we hear this all the time. You have to persist. Like, I think that I don't know exactly what like you can quantify this, but I think like you have to push through the resistance and you're going to get beat up for a couple of years.
Mhm.
Like, granted, I got going really fast in my mobile home park business. Like, but I got beat up for so long in sales for insurance.
Well,
So,
here's the thing, and you had no idea that you were setting me up, but you set me up perfect because I have an online um, negotiations training called No Means Not Yet.
mm,
And it's at nomeansnotyet.com for everyone listening. And it's all about how to actually get people to talk and open up. And everybody
mm,
thinks that sales and negotiations is this negative thing. It's not. It's just a social interaction. And when done properly, you get people to talk to you and they open up with what they need and you solve their problem. That's all it is.
yeah. Yeah. And you have to, and this is another thing I learned in the sales business is like I learned how to communicate with people. I learned how to go in and just like communicate, right? I've taken some communication courses as well, but I know how to communicate with somebody now. And I can go into any situation, depending on if the person's antagonistic or what, and kind of massage through that and get them to open up at some point. But I think it's such an important skill to learn in sales and negotiations, and especially like, negotiation is super important, especially when you've got, we're raising a fund right now, and you got investors you have to negotiate with, you've got your sellers you have to negotiate with, you have like, there's a lot of negotiation that goes on, and you have to know how to play your cards right. You have to know how to like, it's a very, very valuable skill to have, and I feel like I'm still learning that.
Well, and I love that you said that because I don't think we should ever stop learning. I mean,
Yeah.
I will go back and analyze my phone calls, my kitchen table conversations, and just pick them apart. And this is what I've done for 20 plus years to develop, my style of negotiations. And my biggest pet peeve, and people that have listened to me for a while, they know this. People will go out and spend tens of thousands of dollars on the next shiny object course, right? I want to be a wholesaler. I want to be a landlord. I want to be a flipper, whatever it is. And they will spend $0 and zero time learning how to talk to people and learning how to negotiate. And that should be the exact opposite. Once you have those skills and you keep honing them and you continuously recognize that you can always get better. I mean, this never stops, but it gets a lot easier. And the better you get at it, then people are like, "Oh, Derek Vickers, how did you get all these mobile home parks? You're amazing." Well, no, well, you are amazing, but you took the effort and you learned how to talk to people, and the opportunities in whatever avenue of investing you're in have always been there. They've been in front of your nose. You just either didn't see them or you saw them and didn't take action, right?
Yeah, yeah, and like people don't understand. It's like you're gonna have this is the way that the universe works. You're gonna take some action and you're gonna get resistance,
Mhm.
right? But if you go down and you start from an antagonistic, like, oh my God, yeah, let's go, let's go, let's go, you're gonna get even more resistance. And so it's like you almost have to be sort of um almost kind of just carefree about it. And you
Mhm.
have to take your action from a level of like, hey, I got it. Yeah, he said no, but we're just going to call the next one. You can't get pissed because when you're taking action from that lower level, it's like you're going to get more force back, right? So you have to keep going through it, but you also have to take your action from a higher level, and in a better state of mind. Because I did the opposite for a while, and it just made it harder for me. Like,
Well, I tell people this way, if if you have the ability to help somebody and you don't call them out of fear, shame on you. You're doing that person a disservice. And the other side of that coin is maybe there's a distressed seller out there who really wants to pick up the phone and call you. They found you on a website or they found your marketing and they're scared to death to call you. And the reality is, if you don't give somebody the opportunity to say yes, they can't.
that's right. That's right. Yeah, and I think too, it's just like you just have to like reframe the way you think
Mhm.
about stuff because, I like to take the viewpoint that I'm the cause of everything. So if I get some asshole on the phone, I'm like, okay, how did I pull this in? What did I do to create this, right? So it's like having that different viewpoint is super massive and just saying, hey, I'm gonna be the effect of everything and like these guys are terrible and like this guy was an ass. Like maybe you caused it. I don't know. Maybe you had you know what I mean?
Well, you're taking accountability, both good and bad. Whatever the results are, you're accountable for them. And that is something that our society is so anti and probably will never get better at because, well, we could go down that rabbit trail. Why? But, you know, nobody ever wants to take accountability. It's always somebody else's fault. And when you
That's
start
right.
taking accountability, good and bad, opportunities again present themselves. They've always been there. You just got to see them.
Yeah, you just got to see them, and I think that's a great point because you have to. People will be like, oh yeah, people will take responsibility for the good stuff, but the bad stuff they don't want to take responsibility for.
Amen. That's a
And
fact.
I was talking to my wife about we always kind of get into these deep conversations and things, and well, it's like, people get angry at the things that they cause and
Mhm.
think it's somebody else.
Well, you even mentioned, raising money. And I get people that approach me all the time and say, I have a hard time asking for money. I have a hard time asking for a loan. You're not asking for a loan. You're not asking for money. You're giving somebody an opportunity to get a great rate of return in your product or your business or your asset, whatever you're in. And when you switch that mindset, it gets way easier talking to people. I don't ever ask anybody for money. I tell them what I do, how I fund my deals, and they ask me, how can I get involved in your transactions?
Yeah.
And it's really just, again, a mindset shift and go out there with, high morals and ethics and know that you're able to put people into good deals and you have the conversations. You will raise the money.
Yeah, yeah, that's a good point. Like, I don't think, yeah, that almost seems like people are asking you from like a, oh, please can you give me money? Like, hey, this is the deal that we have. It's a great deal. Like,
Mhm.
people will then ask you, like, how much do you need? Right? How
Right.
much do you need? And you want to know a secret of raising money? It's easier to raise more money than it is less money, by the way.
Oh yeah.
If I'm raising money for a $2 million deal and I'm going to ultra high net worth guys, that's people that are worth, 30 million and up. I'm like, dude, well, I'm not 200 grand. Like, the fuck is that going to do for me? But if I'm like, hey, I'm raising a $50 million fund, I'm like, hell yeah, I'll put 5 million in there
Hmm.
because it moves the needle for them.
Hmm. It's worth
200
their
grand
time.
doesn't move the needle for them.
It's worth their time and their attention.
Exactly.
And the other
Exactly.
secret is anybody that's listening to this that's ever raised money, the people that have, smaller dollar amounts will take you as much or more time to babysit than the people that have higher dollar amounts, and they will drive you nuts. They really will.
Yeah. Yep, and I think this is a lesson that people probably have to learn in the capital raising thing at some point. Like, we were talking to a guy a couple of days ago, and about the fund. He's like, "Yeah, I'll throw in a couple million." It's just like
Mhm.
whatever. And then we have a guy like, look, we need our $100,000 investors too.
Right.
So I get that, but like the time that my team and I spend on that person is usually a lot more than the guy that's writing a check for five
Yep.
because they understand the game, they understand the business, and they're not going to die if they lose their 5 million. Like, I'm usually very, um, I'm disclosure oriented. Like, hey, like this is an illiquid investment. Like, I'm making sure that they really want to put that 100 grand in.
Yep.
Um,
Well,
so, anyways,
we jumped ahead a little bit to the capital raising, but honestly, the listeners don't even really know what you're doing right now. So at this point, since 2020, you've got what, 40-ish mobile home parks?
yeah, 44 parks, 2,100 lots. We have another 300-ish under contract now. It'll be closing in within the next, 45 days. And we got a big pipeline of probably another 1,000 lots that we're working on right now to get under contract. So we're expanding. We just launched our new fund. It's a $20 million fund. That's going to be a closed-end fund, where we're going out and buying mobile home parks across the Sunbelt. And we have the interesting thing about our fund is that it's not a blind fund. Like, we literally have, $10 million, 15 million bucks worth of deals under contract right now that are going to go into the fund. So there's
Mhm.
seed deals in the fund, and it just kind of coincidentally happened that way. But we buy value add mobile home parks is what we do, and we buy like a 1 or 2 star park and turn it into a three. We don't buy the 5 star, 55 and over stuff because we don't like that. We
Mhm.
like the affordable housing because we're solving a problem, right? We're helping with the affordable housing crisis, and where we buy our parks in urban areas is where this affordable housing issue is more pronounced. So we're able to go in there and do a good thing for the city, clean up the park that they don't like. We're able to provide more families with affordable housing, make the communities cleaner and safer, and provide great returns to our investors as well.
The difference between a good deal and a great one, it usually comes down to what you say and how you say it. That's where Elite Negotiations Academy comes in. We help real estate professionals master the art of negotiation through real-world coaching, live deal analysis, and breakdowns of actual calls. Learn how to control the conversation, build trust faster, and close deals without leaving money on the table. Whether you're talking to sellers, buyers, or lenders, this is the skill that pays for itself. Try it out. $49 per month for your first 3 months. Visit EliteNegotiationsAcademy.com and start negotiating like a pro.
Okay, so I'm going to kind of dive into a little bit more detail on actual park investing, mostly because I love these self-serving types of shows that I get to do because I get to ask questions I have, and everybody else gets to learn. So like for me, I'm very interested in RV parks and resorts versus
Yeah.
mobile home parks. Um, and a lot of it is similar. So, do you have a minimum size park that you want to buy? Does it have to have a certain number of pads before you'll even look at it?
I mean, look, I've got a bunch of stuff in Florida. So if it's in Florida and it's a great deal, it's across the street and it's 30 units, I'll take it. We're getting to more to where it makes more sense to have 50. I mean, if we go into a market like we're buying something in Arizona right now,
Mhm.
well, we got three parks and it's probably 130 units. So it's, 45-ish lots average.
Okay.
But if it's close by, I'll take something smaller, but if we're going into a new market, we need to get some more scale.
Okay. Um, City sewer and water or private water and private sewage system? Pros and
Yeah,
cons.
yeah, I mean, I don't really care. I mean, they all have their pros and cons. I mean, even if it's city water and city sewer, a lot of these that are in urban areas have old infrastructure anyway, so you could even have CapEx that comes with that stuff. Um, but it's the best. I'd rather have city water and city sewer. It makes you feel slightly better, but I don't mind wells and treatment plants and septic. Like I have them all. You
Mhm.
just have to kind of know what to look for and due diligence. And, inevitably, things come up that, you could get the septics pumped and your septic guy is smoking a cigarette and telling you that everything's okay. And then 2 months later, the drain field goes out. And
Yeah.
so you're like, so stuff happens with, it's just kind of inherent in old infrastructure. That's why in our deals, we capitalize them for that stuff. Like we usually bring an additional buffer of cash
Mhm.
for larger infrastructure things that may pop up that we don't necessarily see in due diligence or something crazy happens.
So, do you ever own any of the mobile homes in the parks? Like maybe you buy a park and it came with a dozen mobile homes. Do you want to maintain those and just rent the homes out along with the lot, or do you want to offload the ownership of the box?
Yeah, we definitely offload the ownership of the box. Like at the end of the day, we don't want to own the box at all. We want to just rent the dirt only.
Are you able to dictate the age of the homes that they have?
What do you mean? Like,
Well, if you buy a mobile home park that's got a bunch of 1970s single wide, 60 14 by 60s, is it your goal to weed those out over time and get the place with all newer types of units?
no, I mean, no, we keep the old units. I mean, you run into a lot of that in Florida and especially in your urban markets. We just provide incentives, obviously, to fix those up. I mean, it's just not, yeah, of course, new homes look better, right? But that's just not our business model to kind of scrape and move in new homes. We like to move in some new homes, but with our business model, we can keep what's there and still add a lot of value.
So if you've got a park, it's got 50 pads, 10 are vacant, there's no boxes on them when you buy it. Do you bring in and set mobile homes and then sell them off?
Yeah, I mean, like when I underwrite deals, like that particular deal, those 10 vacant pads would just be gravy for me. I'm not going to factor that into my ability to add value. Like my underwriting is not going to be contingent upon me bringing in 10 homes because it's not easy to do that, by the way.
Mhm.
It's actually pretty difficult. You got to have the process down. But you can do it. But those would just be gravy money for me. So the deal is going to work with the 40 lots, but if we can bring one in here and there, it's just going to boost the value. But I'm not paying for those.
Right. Yeah, and I've had this happen, buying just residential rental properties and sellers are always saying, "Well, I've got below market rents because I don't want my tenants to move out, but you'll get $500 more a door."
Oh yeah, uh-huh.
Yeah,
Yeah.
sure, but I'm
Yeah.
still underwriting it based off what's proven, and that's what you have coming in right now, and it's a take it or leave it offer. So, not giving out that harshly in the negotiation, but that's where we're going with that negotiation for sure.
Yeah, and that drives me nuts, dude. That drives me nuts. So like, well, my lot rent's 250. You can get 750, therefore I'm selling for 60 a pad.
Yeah.
Okay. Well, I mean, I understand that, but like why don't you do it then, dude?
Hmm.
If that's what it is, yeah, these guys drive me nuts, but
Yeah. So when you're buying a park, are you buying based on cap rates? Are you buying based on cash return? Um, bringing all new money, or are you doing some combination between seller financing and new money? What does that look like?
yeah, I mean, look, I'd love to get seller financing on every deal, but it's just not feasible. Like, I'm not going around looking for creative finance deals. Like, we're trying, if the situation works out, like, seller financing or subject to or anything else, I'm not going out just looking for those deals because I would have missed a ton of deals, like looking for low money down deals. We look for great deals and then, kind of figure out how we're going to get them done from there. That's a win-win for us and the seller. And I mean, cap rates, I mean, there's just multiple ways that I look at a deal. And it's not necessarily based on cap rate because we're buying value add. So I go in and I know what I can do with it in year one. So it's a combination of a couple things. Like me, if I have the opportunity to make this deal a 10 or 12 cap in the first year, that's a deal I'll buy,
Mhm.
right? But buying stuff in the markets that I buy in at an in place 8 or 10 cap is just it's just not really that possible. But you can buy something and turn it into a 12 cap, right? Or even more than that in some cases. But it's also like so we're looking at it that way, but also from a point of like there's a lot of margin of safety in there
Mhm.
to if things go wrong, the deal is still going to do well. Like we have a deal under contract right now. The homes are all rentals, right? So we'll go in and convert those over. It's a super nice park, clean homes. The lots aren't very dense. This is not typical of a Florida park because they're usually packed together.
Mhm.
Um, so the margin of safety here is that the newer homes are nice. So if nobody wants to buy their home and we can't do anything else with them, we can keep them as rentals and we're still collecting, you know, 12, 13, 14, 15, 1600 bucks a month and we're paying, 70, 75, 76,000 a unit for.
Mhm.
So look, I don't want to own the homes, but like, hey, if hell freezes over, we'll just keep it like that. But this
Right.
market has great demand, so more than likely that's not going to happen,
Well, and
right?
that goes back to your model of the, affordable housing. That's the demand. And
Correct.
they can't go down the street and put a roof over their head for less money and own it.
Yeah, yeah. And look, like you have to like this is why I like buying in these high demand urban markets that are competitive.
Mhm.
Like people like, oh, let me buy a 10 cap in the middle of nowhere. Like I just don't like that. It's not my business model. People do it, but the supply and demand constraints and like the differences in that are so much more pronounced in an urban market, in a hot market. There's
Mhm.
much higher demand and the supply is less. So like even that is another margin of safety. Like mobile home parks generally, you have a margin of safety. They're very recession resistant because it's the cheapest place in town. It doesn't matter. It like kind of doesn't matter because the people there, like the next place they go is, I don't know. Maybe they could go to somewhere else, right? So people don't. It's not. They're not susceptible to the, ebbs and flows of the market as much.
Mhm.
But forget what I was getting at with that, but I think I was just talking about margins of safety, but the like where we buy, I think gives us even more margin of safety.
Yeah. So what size team does it take to have 44 mobile home parks on your acquisition side, management side, across the board?
Yeah, so we've got a team. We have 3 people in acquisitions. One acquisitions kind of administrator, and then we have an analyst that helps analyze the deals, put the deal decks together, and things like that. Um, and with AI, like we can, do some more stuff there with a smaller team. And then the management team, we've got, let's see, one, two, like 6 people corporately that are handling different aspects of the administrative side of the business, right? And then we'll have a regional manager that handles like a cluster of properties. So we just, after these next few acquisitions, we'll have enough in this particular area in Florida where we'll put another regional manager there
Hmm.
and they'll kind of float around to each park. And then with the support of the back office, right, to do a lot of the tenant heavy lifting. If somebody has trouble paying rent or just kind of the BS stuff that happens every day,
Yep.
the main office handles most of that. So the regional manager can focus on executing the business plan and handling projects and selling homes and moving the business plan forward. So it definitely takes a team. I have a partner, my COO, like he's awesome. I have somebody that helps me with the capital and investor relations as well. So we're growing. Got a bookkeeper and CFO, and we're going to be expanding more. Here, really in the next 6 months to the end of this year. Well, 6 months would be the end of this year. It's crazy. I'm like, it's July already. Like, come on. Um, but yeah, so it definitely takes a team. Like you have to, it's almost like you can't, when you're an entrepreneur, you're like, oh my God, I don't want to hire this person and pay him 50 grand. But like every time you do, it's always ends up being better. You just have to kind of knuckle up and do it. And you're an entrepreneur, dude. You're gonna get paid last. I mean, I don't know what else to tell you.
Yeah, and I think that is the key where everybody wants everything front loaded. And I've been in this 22 years. I've been through different market cycles. I've gotten my ass kicked and, lost everything before and got it back and all the different stuff, right? And the one thing I know is you are going to have deals that go bad. And the goal is to have more that go good than the ones that go bad, right? It's your batting average. But you've got to put your investors and your team first, because without them, you're nothing. And
That's
I
right.
see that I see people do that time and time again, right? They want to reap the rewards and the benefits and pay everybody else last if there's anything left. That's not a way for longevity.
Yeah, that's right. That's right. Yeah, you need to definitely do right by your investors and everybody else. I mean, like we've had situations where we've had to do that. Like, we've never lost money on the deal,
Hmm.
but because it's hard to, unless you like you get trapped in debt, like maybe someone did in the last couple of years. They were hoping to refinance at a 5 cap and it was a 7.
Hmm.
Um, that can get a little weird, right? But typically, real estate, if you can just kind of hold out, you'll be fine and you're not going to lose money.
Yeah. And that's probably the direction that I want to take this as we kind of start to wind this up. Um, what do you see across not just the mobile home investing, but just across the economy? Because you're in a space that is very, well, I don't want to say very safe, but it's safer, right? As you mentioned, from the ebbs and flows. But what do you see happening just overall?
Yeah, I mean, real estate is like, yes, the macro economy has, an effect. The one big beautiful bill, we get 100% bonus depreciation back. We can depreciate 75% most of the time of the value that we pay for the park in year one, which is freaking massive.
Hmm.
So yes, stuff like that has a big effect, right? We'll get more investors that want tax benefits and whatnot. But it's really market dependent. Real estate has pockets. I mean, you know this, Derek. Like the market is different in Florida than it is in, Tucson and Phoenix, Arizona, or what it is in, somewhere else in Texas or whatnot. Um, but I guess overall, I think we're still going to have a strong demand for affordable housing. Depending on what happens with the Fed chair, I think we could have a monetary policy shift like overnight, which would then, bring more confidence to the markets. And then, like, who knows what's going to happen?
Hmm.
So the seller that wants to sell for a 5 cap today is probably going to want a 4 because the broker is going to call him and tell him he can get a 4 now.
Yeah.
And so it's going to be kind of the same thing. I mean, me personally, I think we're probably I think we're probably at the bottom right now, or starting to like trend back up, to be honest with you. I think we've been at the bottom for the last little bit, and I think it's just going to start trending forward. But we'll see. I mean, the way we buy, like, we're turning these things to 10, 12, and 14 caps in the first 12 to 24 months. So if interest rates go to 9%, we're going to be fine. We've still got a spread, but it's not going to be as lucrative, obviously.
Yeah.
But if interest rates go down, we're going to scorch the earth.
Yeah. So you're funding with institutional funding on the primary money source and bringing in private capital for, like second position, or how's your, I don't want to say typical because I know there's no such thing as typical, but what's your normal transaction look like from a funding standpoint?
Yeah, so we're just raising money from, accredited investors, friends and family, no big institutions yet. I mean, we've got some smaller family offices that we've worked with. I mean, um, and some bigger kind of capital groups that we're looking to potentially work with. But, I think um, we know our value. Like these parks, like you can't, it's not like multifamily. You can just go hire a third party management company. These
Mm-hmm.
deals are not easy to find. You
Yeah.
got to have the relationships. You got to have this. Like you want to buy stuff on market? Okay, go do it. Like
Mm-hmm.
we buy out most of our stuff off market or through pocket listings, through
Yeah.
great broker
So
relationships.
you're not using bank financing?
Yeah, we are. Yeah, we're
Oh,
using
okay.
bank financing.
Okay.
Yeah. Yeah, we bank finance just about every deal, and we end up bringing, about 40% of the purchase price in with CapEx or a little bit more. And then yeah, we're just rolling,
Mm-hmm.
you know.
Well, speaking of rolling, time is flying, and I got a lot more questions for you, but I'll stop with the last question that I ask almost all my guests. What is one question I should have asked that I did not?
Um yeah, I mean, I don't know. Maybe something that I mean, I did kind of tell you some stuff that I've learned recently about learning how to kind of take action from a higher state versus like forcing it and being like forceful and anxiety kind of taking action. I think that's a big thing that I've, sort of uncovered. And yeah, I don't know. I don't know. I mean,
That's all
what
right.
kind of answers do you usually get, you
Uh,
know?
I love that question because it gets the juices flowing, and people are able to tell me something I would have never even known to ask. But I think we covered a lot, Derek, and I just really appreciate your time and your knowledge, and it's fun to see somebody grow that quickly, but that controlled as well, because that in itself is a struggle.
Yeah. Well, yeah, you could ask me about that. I mean, it wasn't very controlled in the beginning. And we ran into that in 2021 where we had to like, oh, the machine broke and we had to kind of go back and fix it. So now it's very controlled. We have a good system now, but we had to get beat up a little bit to figure that out.
So those of you that are watching, you can see over Derek's shoulder, it says the Mobile Home Park Show. That's your show, right? Your podcast?
Yeah, yeah, we do a new episode every week. You can find that on iTunes or Spotify, the MHP show. You can go to my YouTube channel and check it out. You can check out the videos. I also do YouTube videos and things like that. I'm all over social media, so you can just look for me at Derek Vickers. And if you are a passive investor and looking to potentially invest in mobile home parks, you like the idea of it, you can go to victorycapital.com. That's VICKTORY capital.com. And you can click on offerings and you can schedule, or you can just schedule a call there with me and my team and we can chat with you.
Awesome, awesome. Well, again, it was really nice to have another Derek to chat with. There's not enough of us in the world. Maybe,
That's right.
maybe not everybody will agree with that, but it's not their show. So,
Yeah, that's right.
so we'll wrap this up. To everybody else that's a normal listener, you know how this goes. I appreciate you. Please help share this, spread this around as much as you can. Social media, give us all the likes, the loves, the shares. And if you just found us, Thanks for being here. Go back in our archives. We've got lots of shows, lots of different guests in different genres of investing. And until the next show, get out there, do some deals. You got no excuses, no reasons to quit. If Derek can do it, so can you. So till the next one, go get some deals and we'll see you.